Setting up a hotel financial system comes with a multitude of risks, but none are as immediately dangerous as failing external government compliance on day one. While internal management reporting allows for a margin of error and subsequent adjustments, external tax authorities demand absolute 100% compliance from the moment the doors open. A single mathematical error in transaction taxes triggers severe financial penalties and immediate government audits. If errors persist, authorities can enforce operational suspension, legally revoking the property's license to do business. To prevent this, the Director of Finance must establish the Statutory and Tax Reporting Framework. This acts as the final external control module for the property. The framework relies on three pillars: value-added tax, localized tourism taxes, and broader local compliance mandates. The immediate priority for the finance team is to configure the entire hotel tech stack to identify and process all transaction-based taxes automatically. Mapping these rules directly into the software ensures the hotel operates legally and remains fiscally responsible, starting with the very first guest interaction. Flawed configurations at opening pose an immediate existential threat to both the physical and legal viability of the entire property. This architecture begins at the point of sale. The front-of-house operations rely on two main systems: the Property Management System, or PMS, and the Point of Sale System, the POS. In this flow architecture, precise tax codes, like VAT or sales tax, must be hard-coded directly into these platforms, capturing separate data streams for room revenue and retail goods. These codes are then mapped directly to relevant liability accounts in the central general ledger. This routing is rigorously tested to verify that the correct tax rate is applied to the correct revenue stream. A spa treatment is taxed differently than a retail item, and the system must recognize the distinction instantly. The configuration must also adhere to strict legal requirements regarding how dynamic operational discounts interact with these taxes. Look at this equation sequence. The law dictates a rigid mathematical order. The tax must be calculated on the gross revenue before any discounts are applied. If the software is programmed to apply the discount first and calculate the tax on the reduced amount, the hotel will consistently underreport its tax liabilities to the government. Pre-opening testing must simulate thousands of daily microtransactions to verify that this exact calculation logic holds up under heavy operational stress. Mathematically perfect mapping at the POS and PMS level forms the immutable foundation of the entire tax compliance pipeline. National taxes are only part of the equation. High guest turnover brings diverse revenue streams, requiring the hotel to navigate unique regional levies. The system must be equipped to handle localized charges, including tourism taxes, city taxes, and specific resort fees. The hotel's standard operating procedure must explicitly dictate how the digital systems treat every single one of these distinct charges. This diagram shows the required branching logic. Depending on the jurisdiction, the system must classify these local fees down one of three distinct paths: as tax-exempt, as taxable, or as a completely separate revenue stream. Proper routing through these paths ensures the exact tax liability is isolated, segregated, and accurately reported to local authorities. Misclassification in this specific area is a common trigger for severe local compliance audits. Because these regional rules vary so wildly, the Director of Finance is required to engage local external tax specialists to review the technical setup. The sheer complexity of local tax laws means that certification from external counsel is the only way to guarantee the configuration is legally sound before the doors open. The compliance architecture must also face inward, extending beyond guest-driven revenue to monitor employee compensation. The Human Resources Information System, or HRIS, serves as the next critical node in the tax framework. The Director of Finance ensures the HRIS connects seamlessly to the main framework, funneling data into a dedicated general ledger line for employee statutory contributions. The software automatically withholds and tracks individual employee income taxes alongside mandatory statutory contributions. These withholdings are mapped directly from payroll into centralized liability accounts on the general ledger. Total compliance means the hotel acts as a flawless tax collection agent, simultaneously capturing liabilities for both its transient guests and its internal workforce. Tracking a digital liability on a spreadsheet is entirely different from physically having the cash on hand to pay it. A perfect technical configuration is effectively useless without strict control over the operation's liquidity. Notice how this digital ledger correlates with physical cash flow. The Director of Finance establishes separate physical bank accounts exclusively for withholding statutory funds. Cash equal to collected VAT and employee withholdings is consistently routed from the master operating account into these specialized buckets. This enforces an absolute financial rule. Statutory funds must never be commingled at the hotel's day-to-day operating cash. By physically separating the money, the hotel guarantees that the cash is always available the exact moment remittance to the authorities is due. These segregated bank accounts act as a liquidity firewall, transforming abstract ledger liabilities into guaranteed fiscal readiness. With the systems configured and the bank accounts secured, the focus shifts to ongoing execution, governed by the Statutory Reporting SOP. This execution relies on a definitive, cross-referenced compliance calendar. As shown here, it links external deadlines directly to internal workflow nodes. The calendar tracks every mandatory external reporting deadline, from monthly VAT filings and quarterly income tax estimates to annual local license renewals. The finance team takes these fixed deadlines and integrates them directly into their daily and weekly accounts payable and treasury schedules. Faster, more urgent tone. This daily integration forces the team to stay ahead of the schedule, ensuring timely filing and payment and permanently avoiding late penalties. A perfectly configured tech stack is only as strong as the rigorous operational schedule that maintains it. The entire structure operates as a single interconnected mechanism, from POS and PMS mapping through HRIS payroll tracking into segregated bank accounts, and finally out through scheduled treasury remittance. Because the financial and legal stakes are so high, local external counsel must audit and certify every single connection before day one. Meticulous adherence to this tax framework serves as the ultimate shield. It protects the owner's investment and secures the hotel's fundamental license to operate.